Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin / cryptocurrency update for July the 2nd. Before I jump into the content for this video, please do me a huge favor. Hit that thumbs up button, make sure you subscribe to the channel, and make sure you leave me a comment below. That helps me out tremendously. So I just shot this video. It ended up being like 35 minutes long, and then I was listening to it to edit it, and I thought, gosh, ramble much? So I wanted to reshoot it, try to kind of condense things down so that it saves you time and also so that it makes more sense. So essentially, here's the point of the other video that I did. Number one, we are now in a new month. Of course, July is just 2 days in. And the thing with Bitcoin specifically is, for some reason, it likes to start the month off really, really strong. And we've seen that this behavior has been occurring since last summer. It starts off very, very strong, and then it pulls back usually after the first 7 to 10 days. You'll start seeing it calm down a bit, and that leaves us with these large wicks over and over and over again. So point being, make sure you don't get complacent. Make sure that you don't mistake an early month pump for something more than it is. Again, not saying it isn't something, I'm not saying it couldn't go up, just saying historically speaking, it hasn't been the case. Okay. Also, the other thing that I wanted to point out on this monthly chart, something to keep an eye on is, yes, this candle here did close higher. So yes, it did take out this previous high, which would technically be a higher high, and that would give bulls a reason to be excited. The problem is at the very same time, it also put in a lower high on RSI. And of course, if you are into technical analysis, you'll instantly recognize that as something called bearish divergence. So we do have, with this June close being red, we do now have a bearish divergence on the monthly chart. Again, by itself, I don't think that that's enough to simply enter a short position. I'll leave that up to you. But for me personally, I would never go short based off of just that alone. But it is a very bearish signal, and it's something that you should be aware of. Also, we have been putting in a steady line. This is, kind of macro picture stuff, but we have basically, since Bitcoin's been around, been finding support on this monthly chart down around 44 to 45 RSI. And, typically what had happened is you'd have the double top. It would come down, put in a trough, go up, make a new all-time high, put in a double top, etc. This time it came down and made the trough, and it came up and put in a much lower high. So we have to wait and see how this plays out. But it's definitely not a good sign on the monthly when you have, a flat line of support and a series of lower highs, which is what we have here, right? Lower high, lower high, lower high, lower high, which looks different from price. So this didn't look great to me. Just wanted to quickly mention it to you. Over on a 3-day chart, there's a couple things that I think are worth paying attention to. The first one, it doesn't matter whether you're a bull or a bear, you should be watching this. There is a potential falling wedge on this RSI. So what I want to do is I don't want to get too bearish or too bullish. I just want to wait. This is me, not saying it has to be you, but I want to wait and see which one of these breaks. Does it break south, in which case it's going to be a bearish signal? Or does it break and close north, in which case it could be a bullish signal, right? So I am going to be watching that wedge. One thing worth mentioning is we did get a 3-day close yesterday, and it failed to break outside of this red box, which is that same quote-unquote bear market box that I've been talking about since last summer. We just keep playing inside that box. Every time we break out, we seem to go right back inside of it. So that doesn't look great to me. Also, this looks a whole lot like distribution, which I've mentioned a couple of times over the last few weeks. You've got a big move up followed by a ranging market. More often than not, that's going to be distribution. Could pull a gotcha. Could absolutely end up being reaccumulation, which looks very similar. But I lean toward the distribution scenario. So the two levels that I'm really watching price-wise in this 3-day chart are going to be the bottom of this range, which I consider to be down around 88.50-ish. And the top of this range, which is up around 9,800-ish. If either one of those levels break, it's going to be, in my opinion, very interesting. And if the top breaks, in my opinion, it's going to be very bullish. If the bottom breaks, in my opinion, it's going to be very bearish. If we jump down one more level, we'll go down to the daily, and this will be the last chart that I talk about in today's update video. A couple levels that I'm watching here. I'm watching the two gaps. These are liquidity gaps. They're not the same as like open air gaps, but they are liquidity gaps. And one is sitting right down here around 54.50, and the other one is sitting right down here around 7,800-ish. So I am watching both of those areas. I'm also watching the 250 moving averages. The 50 moving average is typically what a lot of bulls like to use as their gauge, or their line in the sand, if you will. When it's above it, they tend to be bullish. When it's below it, they tend to be a little nervous or a little bearish. We are obviously well below that, but we are still above the 200-day moving average, down around 83.68. So we'll be watching both of these with interest if price gets close to them. Right now, it's pretty far away. So instead of watching the moving averages, what I'm more focused on at the moment are these levels, these support and resistance levels. So if you remember in last week's video, back on June 22nd, I had actually shot a video early that day before this pump occurred, and I said that this looked like a liquidity gap or a potential liquidity gap, and I could see price pumping back up to fill that in or test this yellow level around 97.80. And if it broke through that and closed above it, I thought we would probably go up and test the green line. If not, I thought we would go back down. And my opinion at the time was if we went back down and tested this yellow line of support, that it had been tested too many times and that we'd break through it. And that's exactly what happened. We moved up in a very cliche fashion. We filled in this liquidity gap back here on a wick at that. We went down, tested this line, and then collapsed through it. So now what it looks like to me is it looks like this pump up, right? These last couple of days where it pumped up from a low of around 8,800 all the way back up to a high of like 9,300. It looks like a classic bearish retest. Is that what it is? I don't know, right? I don't have a crystal ball, but that's what it looks like to me, and that's how I'm going to play it until proven otherwise. So this looks like a down move up to retest this previous area of support, flipped resistance, and if this is indeed wanting to head down, we should get a move south off of that. First level that I'll be watching for is down around this red line, which is around 8,800, and then I want to watch what it does there. And again, remember, we've got this line here at 88.44 on that 3-day chart as well. Okay, so just a couple of levels that I wanted to give to you guys. Again, I want to keep this video short because the other one ended up going on for 30 or 40 minutes. I started talking about stock markets and global conspiracies and silver and all this kind of stuff. So I don't want to do that, but I do want to mention one other thing before I wrap up, and that is this. In my weekly update video a few days ago, I mentioned some theories about hyperinflation and deflation and some things that had occurred during the Great Depression, etc. And I had said, hey, look, this is outside of my wheelhouse. So if I'm saying anything silly, somebody please correct me or call me out. And thankfully, I have awesome viewers. And a couple of viewers actually said, well, one thing you're missing is that during the Great Depression, the U.S. was still on the gold standard. An amazing, excellent, right, input, because it was. And it does change things, right? My opinion of trying to compare what's happening now to the Great Depression, from a chart point of view, it looks very similar. But from a fundamental point of view, that's a major difference. They couldn't simply print money during the Great Depression because they had to have gold to actually back that money, right? Well, we no longer have that issue. Nixon took the U.S. off the gold standard in the early 70s. So, they can just print and print and print and print, kind of like Tether, right? If you want to compare it to that, Tether just seems to print, money out of thin air. It's not back to one-to-one like it supposedly was, or at least that's the theory that floats around. So it does change things, because if they can just print unlimited money, maybe they can, somehow keep this stock market from completely crashing, and maybe they can, avoid some of those things. The unfortunate side effect, of course, will be, inflation and quite possibly hyperinflation. So I don't want to dig too deep into that. I'll probably talk more about it in the next weekly video. But I did want to at least mention, hey, make sure you're aware that we are not on the gold standard now. We were then, and that is a very, very fundamental difference. All right. So with all that being said, please remember that I am just some guy sitting in a spare bedroom. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, precious metals, or anything for that matter. All right. Also, if you haven't already, make sure you give this video a thumbs up. Make sure you subscribe to the channel, and make sure you check the description for a link where you can join the Patreon to help support the channel. We're still trying to get up to that $1,000 a month level, which guarantees 3 update videos a week, and I try to do a couple of extra posts in there when the market is moving. It's been rather boring lately, so I haven't made as many posts, but when it's moving, I try to keep those posts flowing at a regular pace, usually, several times a week. So make sure to check it out. Super cheap, basically a cup of coffee, maybe an expensive cup of coffee. It's about $7 a month. All right, this is James with Crypto Common Sense reminding you to please trade safe.